What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 5th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we are going to talk about the price action in the indices. We're going to go under the hood and we'll check out our sectors and style factors as we always do. We'll talk about some of my trades for the day, and we'll wrap up with options order flow. Before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump in here. And today was a chop fest. So let's take a look at what we had. So for our box scores, we had S&P 500 as measured by the SPY close up 0.03%. We had the NASDAQ QQQ close down 0.34%. We had the IWM small caps close down 0.4%. And we had the Dow Jones close up 0.23%. So a very mixed bag. And depending on which stocks you were looking at or which stocks you were trading, this either seemed like a rip-roaring bull market or, a complete bear market. And if you look at this, I drew in these little trend lines for the S&P 500. A lot of times when it appears, hey, maybe we're starting a little bit of a downtrend, I will just draw in the lines and see, like, does this price action actually fit in with a downtrend? So I just threw these on my chart here. But when you look at this candle, or really these past few, you can see, like, all right, this was our high. Then we had a big extended range candle to the downside. Then we had sort of like this weak bounce candle that was sold. Another huge extended range candle to the downside. Now we got another just very weak bounce candle that was essentially sold. So like when you have an extended range day like this where like you're down over 1%, or I think we only closed down like 0.8%. I forget what it was, but yeah, really big range. And then the next day for your, big bounce, all you get is 0.02%. That tells me like, hey, there could be something wrong here. We were not able to close above this monthly point of control. So that's definitely like there were active sellers in the market. We are still above this 20-day simple moving average. So in the grand scheme, when you pull back this chart, we are still in an uptrend. But I think right here, this market, it's kind of like, my opinion now, it's like guilty until proven innocent. This does seem pretty weak. And like what I'm noticing too is there's this rhetoric about tightening interest rates, slowing down asset purchases. And I noticed, like, this is the other thing too. A lot of times when you get into these periods of the negative price action, it's like you just have these constant headlines that are negative. What I'm noticing is almost every time there's a Fed speaker now, everything that they're saying kind of like disrupts the market. Or if the market's bouncing, then one of these Fed speakers comes out and says like, hey, XYZ tightening, and then all the sentiment is gone, like all the bullishness is gone. Like today we actually got some news about the SEC is stepping up their regulations in terms of investment managers using total return swaps. That's what got Archegos, what made them go belly up. They're also doing some regulations on, I think, retail investors and like the gamification of trading, because they don't want another GameStop to happen. So yeah, a lot of just like lukewarm headlines that aren't really getting anyone excited. If you look here as well on our hourly chart, you can see we tried to rally into this weekly value area and we were rejected. So when you look here, this is right at the end of the day, all this volume that came in, and for the most part it was selling volume. So this puts us in a bit of a precarious spot where we rallied off the lows from yesterday, which is great, but we couldn't really hold these highs either. So at this point, I would say this is like a pretty, for me, and this is looking more and more like a downtrend when you look at this. it's very tough to develop a conviction either way. So like, for myself, at a certain point today, it was like, oh my gosh, this looks so bullish. Like in the morning, it looked horrible. It was like, oh man, we're going to slip into the abyss. Then buyers came in and auctioned it higher, and you can see we made this high up here. Then sellers came in, so it was definitely like a very choppy market. Today in my trading, I definitely got a little bit chopped up. And we'll talk about that as we go through the video. But yeah, if we look at the NQ, you can see here, yeah, the NQ, definitely not confidence inspiring either. We traded below this monthly value area, and today, this was our bounce day. Our bounce day was down 0.33%, so not really that great. And then when we look at, the hourly, we're like nowhere near that weekly value area. The small caps, in the morning they were very weak. They reversed off the lows, and towards the end of the day, that's when a lot of institutions are transacting, like that 2 to 4 window. So you can really get a feel for like what's institutional sentiment when you get towards the end of the day. And we were slipping into the abyss in the morning here, and then we rallied back, and then in the last 2 hours of trading, we were just taken right back down. So definitely leaves a question mark at the end of this day. And then the Dow Jones, I think, did pretty well. The Dow Jones has some financials names in it, industrials names, and more of those names that are going to benefit from this inflation narrative. You can see the Dow definitely looks the best right now out of all these indices. The Dow is actually pretty close to breaking out. And then another thing with this, with the VIX and the VVIX as well. So you can see the VIX closed down for the day, down 1.69%, but it put in a green candle. Same thing with the VVIX, which is the volatility of the VIX. At one point I was like, oh man, this looks great. We're trading all the way down here on the VVIX, and I was operating as such. By the end of the day, the story had really changed. So at the end of the day, I had to, just be like, what, the picture that I thought I saw in the morning, like that didn't really develop. So I had to sort of change up my game plan a little bit. All right, so let's take a look here. And okay, so market breadth wasn't horrible. So you can see here in the S&P 500, we had more advancers than decliners. Same thing with the Dow. Breadth was weak in the Qs and the small caps. But overall, this isn't horrible. At one point during the day, we were at like over 300 advancers in the S&P 500. And then towards the end of the day, this came back off a little bit, but not the worst that we've seen. And that's what I mean by like, depending on which stocks you were looking at, you could have had stocks that were going up a lot, stocks that were going down a lot. It's a very, everything's different here. And you can see that, it's pretty evident when we look at our heat map. You can see the energy names crushing it. Healthcare did okay, these banks. But then the names that really matter are still kind of languishing a bit. So we had Amazon down pretty big, Microsoft pulling back, Facebook as well. And a lot of these names earlier in the session were trading, up over 1% or, pretty close to 2%. And then utilities got absolutely demolished. So did real estate. And what I'm thinking is, it kind of reminds me of like semiconductors. Like maybe a month or so ago, the semiconductors were really ripping to the upside. And I remember, there was this whole narrative like the semiconductor shortage. And I remember that narrative was around for quite a while, maybe like a few months or so. And then all of a sudden, these semis names really ripped to the upside here, and they made a new high. And I remember it was like as these names were really ripping and climaxing, that's when everyone was like, the semis are the market leader. Like you have to be in the semis, like, XYZ semiconductor shortage. And then ever since then, they've kind of just like toppled over. For some of these inflationary areas of the market, this kind of feels similar, where like I noticed today I started seeing online everywhere, everyone like, oh yeah, the inflation names are going to lead the market. And I'm seeing a lot of these are like very extended. So like the TIPS fund, This is the Treasury Inflation Protected Securities. You can see here it's been trending up for about a month, but this was like, oh my gosh, huge blow off candle right here. This is actually, a nice breakout above the monthly value area. So this actually looks really good. And you can see we have this VPOC ahead of us. So maybe this thing is really just getting going. But I noticed that with a lot of these different areas. Like I own CCJ. I actually trimmed this one up a little bit. It's a uranium name. And this one kind of had like a blow off move as well. This one, it looks like the top was sold a little bit. But yeah, a lot of these names. I saw BP with some big options activity today. This one, really nice move and finished on the highs. Definitely be watching this one tomorrow. But yeah, it pretty much was like inflation names are booming. And then, the areas that'll perform worse in an inflationary environment really just completely puked. And what I mean by that is like utilities. They closed off the lows. I actually purchased some longer dated calls in the utilities today. But yeah, this was just, complete puke. This to me, like when I see a candle like this in a specific sector, same thing on the upside or the downside, it just tells me like pretty much the whole market came to the same conclusion at the same time. So yeah, the utilities, definitely struggled today, and real estate as well. So you can see real estate was on a really nice tear. This is likely a good buying opportunity, closing right on the 20-day. I didn't touch this one because I took the utilities instead. But yeah, you can see here, pretty much 3 down days in a row. So the other thing that's popping into my head here is like, so in this market, a lot of times it's been like a bad idea to chase things after they're already on the move or already extended. So at this point, as I look at the landscape, maybe there's like selective inflation names that look good or whatever, but at this point, it's kind of like, oh man, I don't know if I want to chase these things. So we'll see what happens. That's kind of why I went with the utilities, because I'm like, I'm not going to like chase the one that's really up today. I'll take this one that's pulling back a little bit. Because I've noticed in 2021, I've noticed that it's a lot easier to buy, bullish trends when they're correcting than sort of buying the breakouts of these bullish trends. But we'll see how it plays out. And then let's take a look here. We'll go to our sectors and style factors. Yeah, so you can see here, energy absolutely crushing it, up 3.23% today. Materials, financials, those are our leaders now, these inflationary names. You can see home builders flip positive as well. Okay, and the capital markets ETF did well. And then the laggards, yeah, they were these areas that are going to be disadvantaged in an inflationary environment. So we had all these ARK funds really struggled. And you can see the SPAC ETF struggled. Yeah, a lot of these different areas. And the interesting thing is in the morning, these were all green, and then they just immediately flipped right over. So yeah, definitely not good sentiment for this bottom half here. And then checking out our style factors, you can see high beta did very well as a style factor, and also international value. And you can see international momentum as well. So yeah, a lot of these other country ETFs I noticed were pretty strong. The laggards, we had momentum, which was a laggard, and growth as the laggards. So yeah, for a lot of the people that are still heavily concentrated in a lot of those growth names, definitely a tougher tape. Yeah, and speaking of those growth names, I'm still noticing a lot of these growth names really just getting taken to the woodshed. And essentially, like everything that is either in Cathie Wood's portfolio or similar to one of those names, like Fastly reported just after the close. And Fastly, I know this is a name that a lot of investors were in 2020. And it was like, great name. I had a crazy run. But Fastly now, for anybody that's in it, definitely, I don't wish one of these moves on anybody, one of these. But yeah, you can see this one was down, huge. down over 10%. Now it's trading under $50. So I think this is like, what can really happen to some of these names where the valuations are just sky high. Because like Fastly, when you look here, it originally had a crazy breakout at like $25, and then it ran all the way up to almost 140. And this company, when I looked at the earnings report, it really doesn't produce that much revenue even. So a lot of these names, they really ran. And keep in mind, they were running hard for about a year straight. So like the businesses weren't changing that much over the course of a year, but it was just every day, buy, just constant bids coming in. So yeah, Fastly, I think Twilio also reported, which was another one of the winners from last year. Let's see how Twilio is doing. I think Twilio definitely had better results. Yeah, and you can see Twilio not down big, but just not up either. You can see this one's down a little bit. Skills reported the other day. Skills, yeah, and this one also, tough day after the earnings. So a lot of these areas, it's like, it's almost like you're playing Russian roulette with some of these growth names. So let's pull up. We'll go to some of my trades for the day. I actually had one of those growth names, and I cut it out today. So let's see. So in the morning, it looked like, oh my gosh, the market's really going to spill over. So I tactically took some IWM puts. Then, within the next 30 minutes or so, the indices went from red to green, and they started really like building momentum, and the breadth was improving. The volatility was getting crushed. And all of those, it's like, those are kind of the signals that I use of like, okay, this isn't really a market to like push aggressively on the short side. So I actually stopped out of those. I stopped out of those for $8.99, took a paper cut loss here. And so I said in the morning, IWM had every reason to slip into the abyss, and it did not. That is bullish. Because, we broke through support levels, and then, some players came in and auctioned it right back up. I closed out my Honeywell in the morning for a small winner. Closed out for $14. I paid $13.75. My Google call spread, I also closed that one out for a nice winner here. So I paid $4.80, closed out for $6.20. Not bad. That one was like I had that on for like literally maybe 12 hours. And then I took these utilities calls when I saw that sector was just getting obliterated. And then what else did I do? Yeah, so as things looked really bullish, I was like, okay, I'm going to go along some SPY calls. And I'm playing for a squeeze into the close. I ended up stopping out of those into the close. I had paid $10.43. I stopped out for $9.99. And with those, it's always very tough because it's like you always want to be like, no, like I put that on, like I can't take it off because, that means I'm wrong. But like when I saw this candle that was developing, it just told me like as much as I would love to just stick through this and then be right on it or whatever, I can't really take SPY calls when we're closing like that. Like that just doesn't really make any sense. Like even if the market does, go up tomorrow and, we break out of this, that still just wouldn't really be the high probability move. So I took myself out of those. And then what else did we have here? So I had those. And then GoodRx was my problem child. This one, I think it has a very similar factor exposure to a lot of those Cathie Wood names. And this one was just getting taken to the woodshed. So I had some calls for October, and I stopped out of those. I paid $4.40. I stopped out for $2.35. I just said I would rather dial back on some risk here as we continue to have, this volatile, choppy tape. Yeah, because GoodRx, this one has like a 31% short float. So I actually was interested in taking it into earnings. But this one, when you have a choppy tape like this and the candle doesn't look good, in my opinion, it's like, okay, I have to take some things off and I'm not going to leave this one on that just looks so horrible and is not even holding its levels. So yeah, I closed that one out, which I think is a good thing. Just leaves room for something else. And then what else did we have here? Yeah, for stock trades, I didn't do all that much. I kind of just reduced positions a little bit. So Lulu, this was another one on the stock side. That was a bit of a problem child for me, so I stopped out of this one. Then CPRI was one that was acting pretty well. I closed out of that one and just took my winner there. I was like, this looks a little precarious. I just want to reduce a little bit. So I took this one off for a winner. And then I closed half of my CCJ, which is, one of those energy names, and I just took half of it off. It's definitely been acting very well. But the other thing too is like these inflationary names just had such a good day today that I'm like, I would be kind of foolish to not take a target here. Like, I think there's a lot of people that, they're looking at this and they're like, oh man, this is like a great entry. It might actually be, to be honest. But yeah, the top and at least this name was sold. So yeah, I took a target above 19, took half of it off for a nice winner. I had entered it like down here on this candle. And then, yeah, that's about it on the stock side. So now I'm a little bit leaner. I still have, like I have a put calendar spread on in case the market gets, really volatile. But I think, this is a really choppy tape. So for myself as well as anybody that's watching this, I notice all my exposures that have some sort of short component to it, like a short leg of the trade, where I can collect theta decay, those are all doing just fine. But what I'm finding is like this is a very difficult environment to really play directionally unless you're going for a scalp. Because, over the past week, it's like we're up, we're down, we're up, we're down, we're up, we're down. So like it's, a little bit more challenging. So I just want to make sure that in the days to come, I'm just internalizing that. I'm keeping that in mind. And I am, practicing that in my trading. So like those neutral names, like this one I have on MO. This one's working pretty well on the neutral side. So like this one, it's kind of grinding up here. And like I have a butterfly that targets this 49 strike. And a lot of times, like when you're trading directionally, it's like, oh man, I hope it just blows right through that and gets past those key moving averages. In this trade, it's like, oh, well, it would be nice if it goes up to those key moving averages and actually struggles there a little bit, or even gets, rejected by those key moving averages. And in this kind of environment, yeah, getting rejected by key moving averages, it's been happening to a lot of different stocks. Yeah, so those are some of my trades for today. Let's take a quick look at the options order flow, and then we'll break for today. All right, yeah, so Tesla, and this is another one. I entered a call spread for Tesla for May 21st. I have the 780 by 790 call spread. There's a ton of volume here for Tesla, and a lot of these, they're going out in time a bit. This is for June of 2022. You can see we had some Apple flow. His name's CVS. CVS really had a nice day today as well. Yeah, CVS up at 83 bucks. So yeah, somebody is chasing this thing with calls after like a really nice move, but we'll see if it continues. And then I noticed this name IPOE. When it's on the SPACs, I keep seeing repeat call flow. So maybe it's somebody that thinks they're going to have like a good earnings report or something. But yeah, this is another one of those, SPAC or high growth names where they're just kind of having these bounces and then they're just rolling right back over again. And then let's see, yeah, and then at the very end of the day, I can see some SPY put, and I see DraftKings as well. That's another thing where yesterday we had a relatively high put to call ratio. I noticed today when I was looking at the options order flow, it was definitely a bit more bullish. So that's another thing where I was like, let me take a couple things off because I'm not seeing that same level of defensiveness in the options market. But that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow in the pre-market session.